लिंक डाल दो सचिन। Let's see now. Let's start. Right, heading: valuation and types of duties. Valuation and types of duties. Valuation and types of duties. Yeah, now. Customs, there should be three conditions satisfied. What's the first one? There must be goods. Landmass theory. Another one is territorial. System of nomenclature. We have seen harmonized system of nomenclature. Okay. Then okay, have we done section 15 and 16 yesterday? No? Okay, sorry. Let's do this first, then we'll go to valuation and all. Okay. Chalo, see here. Right, heading: valuation and types of duties you have written, no? Under that you write first one. Under that you write first one. Date for determination of rate of duty, section 15. Under that you write first one, section 15. Date for determination of rate of duty and tariff value in case of imported goods. Date for determination of rate of duty and tariff value in case of imported goods. Okay, na? Chalo, see here. What is the meaning of this? What is the meaning of this word? Date for determination of rate of duty and tariff value in case of imported goods. Unlike your DT, in DT your rates and values are fixed. But in IDT it is not like that. It's very dynamic in nature. It can change at any time. Okay. Yesterday we have seen the import procedure. Import procedure also very big. It starts somewhere, it ends somewhere and all. In this process, sometimes it takes 3 months to 6 months where you will close your import procedure. In this 3 to 6 months also, values may differ. Rate of duty also may differ. So which date, what rate, what duty we need to take is the question. Okay, so for that section 15 has given you a clarity. What section 15 says? According to section 15 of the Customs Act 1962, the provisions relating to the date for determination of rate of duty and tariff value in case of imported goods are as under. Okay, in case of imported goods, in this call. In case of goods entered for home consumption, what is the meaning of the word home consumption? We want to pay the duty and clear the goods. The date of presentation of bill of entry, the date of grant of entry inwards, whichever is later. Generally in the procedure which I taught you yesterday, which comes later? Bill of entry. First comes entry inwards, tarvata bill of entry. But sometimes advance bill of entry also can be filed. So whichever comes later, check 2 dates. On that date, what rate is there? That rate you should follow. Clear? Next, in case of goods entered for warehousing, yesterday I told you 2 options. Either you can home consumption or you can go for warehouse. In case of warehousing, the date of presentation of ex bond bill of entry for home consumption. You remember what are the colors of bill of entry? White color, yellow color, green color. A green color date of bill of entry is known as ex bond bill of entry. On that date, what rate is there? That rate you should follow. Okay. Any other case, it is date of payment of duty. On which day you pay the duty, that rate you should follow. Clear? This is called section 15. You write like this. I'll give you a chart. You write a chart. Write like this. Section 15. Rate of duty and tariff value case of ports. Okay na? Section 15, divide that into 2. Section 15, subsection 1, section 15, subsection, divide this. Again section 15, subsection 1, divide into section 15, subsection 1, section 15, subsection 1, clause A, section 15, subsection 1, clause B, section 15, subsection 1, clause C. Here you write home consumption. Here you write warehousing. Here you write any other case. Write like this. That you make. Anna? Now, under home consumption you write. Under home consumption, date of bill of entry or date of entry inwards, whichever is later. Date of bill of entry or date of entry inwards, whichever is later. Warehousing you write date of presentation of ex bond bill of entry. Date of presentation of ex bond bill of entry. Date of presentation of ex bond bill of entry. Any other case, write date of payment. Date of payment. Okay na? Section 15, subsection 2. These provisions will not apply to baggage, stores and coastal goods and postal goods. Post. These are not there in your syllabus. These are advanced concepts in customs. Provisions will not apply for baggage, stores, coastal goods and post. Coastal goods ante goods will move from one place to another place in the coastal area only. Post ante through courier. Post, India Post. Done na? This is section 15. See, what we are trying to understand here in section 15 is rate of duty. What do you mean by rate of duty? Customs rate of duty, rate of tax you can say. Okay na? But whenever you import in which currency? Foreign currency. Say for example, I imported from US. That fellow will send you the bill in which currency? Dollars. Where I can't use that dollars, no? I have to convert into INR. Okay, raskondi ikkada note. Exchange rate. Exchange rate. See, rate of duty is rate of tax. Exchange rate is to convert the currency from foreign currency to home currency. Okay, which rate we should take? The rate which is prevailing on the date of presentation of bill of entry. Ante on the date of presentation of bill of entry, what rate of exchange is there, that exchange you should take. Okay, there will be lot of exchange rates in the market. What is important for us in priority is CBIC, Central Board of Indirect Taxes and Customs. If it is not there, then you use central government. It is not there, then you use central government. If that is not given, then go for actual. Okay, so the first priority is rate notified by CBEC. If that is not given, take central government rate. If that is not given, take actual rate. But most of the times, the rate of exchange notified by CBEC will be given in the problem. PIC. Okay, na? Right. Rate of duty, rate of exchange on the date of presentation of bill of entry notified by CBIC. Notified by CBIC, Central Board of Indirect Taxes and Customs. We have two boards, CBDT, CBIC. It deals with direct taxes, CBIC deals with excise, indirect tax and customs. Done? Indirect taxes and customs. Next, this is section 15. All right, next, section 16. Look here. Look. Date for determination of rate of duty and tariff value in case of imports law. You have different concepts like warehousing, home consumption, any other. Ala exports la em undadu, either export or any other case. Only two cases you will get. Okay. Here, section 16 of the Customs Act 1962 provisions relating to the date for determination of rate of duty and tariff value in case of exported goods is as under. In case of goods entered for export under section 50, the date on which proper officer makes an order for permitting clearance or loading of goods for exportation will be taken. And the date on which he will give an order to clear the goods. Then any other case, it is date of payment of duty. Okay? Export provisions eppudu simple ga untayi. What we have to read is only import provision. So idu kuda chart istanu, raskondi, write down the chart. Right, section 16. Section 16. Rate of duty and tariff value in case of exports. Rate of duty and tariff value in case of exports. Middle of the page you write section 16. Divide that into 2. Section 16, subsection 1, section 16, subsection. Section 16, subsection 2, 1 you divide into 2. Section 16, subsection 1, clause A. Section 16, subsection 1, clause B. In 1A you write goods entered for export. Is you write any other case. any other. Section 16 you write like this: rate of duty and tariff value in case of exports. 16.1 is 16.1a goods entered for export, any other case. Here you write the date on which proper officer makes an order for clearance. The date on which proper officer makes an order for clearance. Any other case you write date of payment. Any other case you write date of payment. Okay na? This for export. 16.2 you write these provisions will not apply EBIT. What is EBIT? Baggage, EBIT, stores, EBIT, post, EBIT, postal goods. Cases it will not apply because we have separate provisions for this. This is a normal imports and normal export. Clear? Chalo, mali revise chestunnanu chudandi ra. Section 15 talks about rate of duty and tariff value in case of imports. If it is for home consumption, date of bill of entry or date of entry inwards, whichever is. If it is warehousing, date of presentation of ex bond bill of entry. If it is any other case, date of payment. Okay. Exports. Goods entered for export, the date on which proper officer makes an order for clearance. Any other case, date of payment. Okay. So let's see how this really works and how we have to use this. Okay. Sure. Come back to problems. This is given in term with valuation and duty put together here. Okay, no problem. Not a problem, like selection will be there. I'll tell you. See here. If you look at this illustration number 25. TDY Industries Limited, an Indian company registered under Companies Act, so and so. He'll give you all this data. Okay. Other information, bill of entry date 12/12/2024, BCD on that date is 15%, exchange rate is 98, interbank rate is 99. Like this he'll give you. Which one you should take? Here rate of duty will be there, exchange rate will be there. Exchange rate you don't have an options. Exchange rate is this only. Exchange rate notified by CBIC on the date of bill of entry you should take. Rate of duty, rate notified by bill of entry or entry inwards, whichever is later. So which one is later? 12 to 24 or 15 to 24. So the rate of duty should be this. Okay, two things untai. Rate of duty untadi, exchange rate untadi. Exchange rate I told you. Exchange rate is what? The rate of exchange on the date of presentation of bill of entry. So ఇది fix 98 rupees only you should take, that too notified by CBIC. Interbank rate తీసుకోవద్దు. Either CBIC or government తీసుకోవాలి. First preference is always CBIC. అలా this will help you for this. Clear? Next. Another problem. Here also it is given, see. The date of presentation of bill of entry, date of arrival of aircraft. Arrival of aircraft is nothing but entry inwards. In case of ship we call it as entry inwards. In case of aircraft it is arrival of aircraft. Student, exchange rate notified by CBEC is 75. Rate notified by RBI is 76. This calling? This rate you should take. Okay. Rate of exchange notified by CBEC. Rate of exchange notified by RBI. We don't take this. For rate of exchange we will take only bill of entry. Rate of duty, bill of entry or this, whichever is later, but rate of duty is not given here, so don't worry. Clear? Allah, that's how this section 15 and 16 is going to clear. Chalo rasko chudam tarvata cheddam problem, you'll understand. Ikkada kuda example ఉంది చూడండి. Other information, date of bill of entry, date of arrival of aircraft, rate of BCD, rate of BCD, which one you will take? This is rate of duty, whichever is later. This is 34.24, this is 21.5.24. So we have to take this. But what you will take? Rate of exchange, bill of entry, bill of entry. So bill of entry date, rate of exchange notified by CBIC 104. అంటే two things ఉంటాయిరా. Rate of duty is to calculate duty. Rate of exchange is to convert foreign currency into INR. Okay na? So rate of exchange ఏమో bill of entry. Okay, rate of duty ఏమో bill of entry or entry inwards, whichever is later. Clear? So when we go to main problems, I'll tell you. Chalo, go back. Right heading. Now in this we have done with intro. We have done with intro, customs, this thing. Then we have done various definitions. We have done with taxable event. We have done with section 15, section 16. We have done with classification. Right, next heading, valuation and tariff value, section 14. Valuation and tariff value, section 14. Okay na? Chalo, చూడండి. See here. Two important concepts. Next two classes are core. ఈ 2 classes లోనే మీకు 10 marks ఉంటాయి. Next 3 classes. ఓకేనా? చూడండి ఇక్కడ. Valuation, section 14, and types of duties. ఓకేనా? ఇవే 2 కాన్సెప్ట్స్. దీని మీదే ప్రాబ్లమ్స్ ఉంటాయి అన్ని. ఓకేనా? వాట్ ఈజ్ వాల్యుయేషన్? సి, వీ హ్యావ్ టు క్యాలిక్యులేట్ customs duty. Customs duty, if you want to calculate, you need to know the value of goods imported into India or exported out of India into rate of duty. The value of goods imported into India or value of goods exported out of India into rate of duty. This is simple simple logic. Like, how do you get income tax? Find out the total income. Total income into tax. Income is a tax. Income tax. Ante kada? Like that, how do you get the duty? Value, can be the duty. But GST lo kuda cheppan. How do you get GST? Value of supply, rate of GST. If you apply, you will get GST. Ante kada? Ikkada kuda same concept. You first find out the value, then you apply the rate of duty, you will get customs duty. Okay? Deen meede manaku problems untai. Three types of problems untai. One problem, only on value. Second problem, only on duty. Third problem, value come duty. Okay na? So, first one, in that we will start with valuation, section 14. Section 14 talks about valuation. As per section 14, there are two things in valuation. First one, section 14, subsection 1, section 14, subsection 2. Section 14, subsection 1 talks about your tariff values. Section 14, subsection 1 talks about, transaction value. Transaction value or assessable value. What do you mean by transaction value? Or what do you mean by assessable value? Both are same, Nana. The two synonymous words which we use for value. If you remember, I told you the logic in your GST. Make GST logic nerpicha. If I am dealing with the business, who knows what is the value of my goods or services? Say for example, we are running Patshala. So in Patshala, for the services that we are giving, who will determine the fee? Government. Government determines that your CA coaching, your CMA coaching should not be less than this. CA coaching foundation intundala, inter intundala, and government cheptada. My coaching, my wish. Who the bloody government is there to tell me? Okay na? Now what is transaction value ante? Between a buyer and seller, what value was there? That is called transaction value. And this transaction value also differs from person to person. If you people know, we have a scheme of BCom@0, right? Din mida today MRP is 1,80,000. So what is transaction value? I got 100 admissions. 100 admissions into 1,80,000. 1 crore 80 lakhs. This is on which I have to pay duty. Okay na? That's it. This is called transaction value. What is that government will do in this? Nothing. Whatever I say, final. Because it's my business. Yes or no? Similarly, in case of import or in case of export, now tell me, who should say what is transaction value or assessable value? Importer. In case of import, we should say importer. In case of export, we should say exporter. Kada? Now, whatever you say, I will take it as final. Whatever you say, I'll take it as final. I told you number of times in tax. Always SSCs are fair fellows. They will not cheat the government. That is the assumption. Okay. So the transaction value is known as normal transaction value at which you have done a transaction. Okay. Let us assume I have imported goods worth 1 crore. Your BCD is 10%. On 1 crore, 10% will come to 10 lakhs. On 1 crore, 10% will come to 10 lakhs. Now, how do you know that it is 1 crore? How do you know it is at 1 crore? Whatever you said, I believed it. So, people started misusing it. They reduced this 1-0. They reduced 1-0. Whatever I say is final, no? My fees is not 1,80,000. My fees is 18,000. Government said, okay. But with that, what will happen? The revenue of the government will come down. Yes or no? So, government em cheppindante, I will take the normal transaction value subject to the condition, star mark. Subject to the condition, star mark. What is that conditions, you know? It is like this. First, These rules we have already studied in GST, same, but little bit extra. You should take price paid or payable, where buyer and seller are not related to each other. What happens if they are related to each other? The price gets influenced because of your relation. Why I should lose my revenue? Bro, for an outsider, I'll give it for 1,50,000, 80,000. My friend daughter came. I'll give for 1 lakh. My wish. Who the hell are you to ask? My business, my wish. You have no rights to ask me a question. Sir, for one student you gave 180, one student you gave 150, for one student you gave 1 lakh. Why it is allowed? My wish. My business, my wish. You have no rights to question. But department says, your wish baane undi. When it is 1,80,000, I got 10% duty on it, 18,000. When it is 1,50,000, I got 10% duty on it, 15,000. When it is 1 lakh, when it is 10%, I got 10,000. Because of your relation, why I should lose the revenue? That's the reason he said, buyer and seller should not be related to each other. Because they are related to each other, price gets influenced. Sir, what happens if they are related to each other? We have rules. I told you in the intro that we have customs valuation rules. Rules cheptai how to do that we will read later. Okay. Now we have to understand in a plain situation. Okay. So first one, price paid or paid ante cash, payable ante credit. Both the transaction we will tax it. Okay. Second, buyer and seller are not related to each other, where price is the sole consideration for GST lo supply and chadukunnam. Ikkademo import or export. Okay na? Import or export. Then it should be the price at the time of import or export. Should be the price at the time of import or export. When these conditions are satisfied, then your normal transaction value, I'll take it as a transaction. Clear? No sir. There is section 14 subsection 2, which is also known as tariff values. There are certain goods on which government has already fixed values. Government has already fixed values for taxation. Okay. I have got nothing to do with your TV or AV. I will not check your TV or AV. Example, gold. If you import gold, 300 rupees is duty per gram. Okay na? If you import, say for example, oil, okay, 1 barrel is 10,000 rupees duty. Okay. If you import car, or per car 1 lakh you have to pay duty. So directly they have given you duties payable based on the quantity. Okay. Your normal transaction value I am not going to check. That is called which values? This is something like, if you people remember, manam DT lo when we are studying for immovable property, I told you stamp duty value. Who fixes stamp duty value? For what? To transfer your immovable property, government fixes stamp duty value, I told you, no? This is something like, okay na? So if values are already fixed under section 14 subsection 2, you don't determine the value as per 14 subsection 1. So for any goods that you have imported, first which section you should see? 14.2 you should see first. If values are already fixed, again you don't determine the value. If values are not fixed, then you come to section 14 subsection 1. Clear? So this is what is the story of valuation. Okay. For the purpose of this valuation, we have got some rules which are designed. Those rules are known as customs valuation rules 2007. Customs valuation rules 2007. This customs valuation rules 2007 gives you rules same like act. How act has a sections? Section 1, 2, 3, 4, 5, 6. Similarly, rules will have rules. Rule 1, Rule 2, Rule 3, Rule 4, Rule 5. Clear? Rule 1 is title. What is title? Customs Valuation Rules 2007. Rule 2 is definitions. Like how in Act, rule section 2 is definitions. Rule 2 is always definitions. Generally, we don't study Rule 1, Rule 2. Okay? Rules start from Rule 3. Your Rule 3 is EV or AV. Just now I told you, no? Normal transaction value subject to the condition. Like this, we have a series of rules under which they will tell you. Okay? Before we go to the rule 4, 5, 6, 7, 8, 9, we have to study rule 10. Why we have to study rule 10 is, rule 10 has given adjustments for transaction value. You remember in GST when we have studied transaction value as per 15 subsection 1, as per 15 subsection 2, we have inclusions and exclusions in the value. Gurtunda? Any taxes, incidental expenses, amount paid to third party, like that 5 sections we have studied. Like that, rule 10 has given adjustments. Rule 10 has got 2 sections, sub rules, 10.1, rule 10.2. Rule 10.1 has given inclusions or exclusions from value. Okay, what should be added, what should be deducted, they said. I'll give you one example. First one, commission or brokerage should be added. Buying commission should be deducted. We should not take. Commission can be added. If you see the word called buying commission, that should not be taken. Clear? Next. Packing can be added. Packing can be added. Durable and returnable packing cannot be added. Packing can be added. Durable and returnable packing cannot be added. Like this, we have a list of items which should be included, which should not be included as per section, as per rule 10 sub rule 1. And rule 10.2 talks about only 2 items. One is freight, second one is insurance. Okay? Now what is this freight and insurance? Dinko manchi story cheptanu, gurtupettukondi story. It will be very helpful for you to remember the provisions. Okay? We are importing the provisions, goods from USA. Now we are in India. Okay na? USA nunchi India ki ela vastayi? 2 options. We don't have a land route. Either it has to fly or it has to come through waters. Kada? Remember this story. This will help you a lot for all provisions of 10.1, 10.2. Easy ga ardhamaipotadi meeku. Once I show you now. Listen to this example carefully. Okay? Chudandi ikkada. USA has got his factory or his outlet from where he is going to sell. Okay? If we are importing into India, who is importer, who is exporter? Mr. X in India is called importer. Mr. Y is called exporter. This is called exporting country. This is called importing country. Clear? Now, the X will fly to US or he'll have an agent in US or in India. I told you C&F agents are untar. As you don't know the customs procedures, what this clearing and forwarding agents will do, they will do this entire process of clearance and they'll give you. Okay na? So once you have a factory outlet, from there goods will start. Here you incur expenditure of loading and transport. Then goods will go to the port area of USA. The goods will go to the port area of USA. Okay. To buy from the factory, what I have to pay? Price. The price of goods. It will have various expenses to be added. Certain expenses we don't take. Okay na? So to this price, when you do some adjustments, you will get something called FOB. FOB stands for free on board. FOB stands for free on board. Clear? What is that free on board? Ante in the port area, you have your vessel. In your vessel, all the goods will be loaded. All the goods will be loaded. So, ante in the port area of the exporting country, to get on to this, what is the cost that I incur? That cost is known as free on board. Okay na? Now from here, what will happen? In the waters, goods has to come to India. Goods has to come to India. To come, ee port area nunchi to this port area, Indian port. How goods will come? Transport. Okay, two things are very important in it. One, freight. Danni emantaru? Freight. Second, insurance. Two mandatory anamata. Okay na? So this FOB, free on board, is called our original cost. Free on board is called original cost. Manak ikkado kudo cost undi. This is cost. This is another cost. Em cost adi? Factory cost or outlet cost. In problems or while discussing the theory, ee cost ni kuda vaadu free on board ane antadu. Idi em free on board telsa? E free on board is not our free on board. E free on board from factory to port area, it will go in some vehicle, no? A vehicle మీద వేసే free on board అంటారు. So two free on boards we will discuss. You don't read it as free on board. You simply call it as or. That's it. Your all confusion will be cleared. Mana prakaram okate free on board. But from that fellow's point of view, there are two free on boards. From that fellow's point of view, there are two free on boards. Clear? So first free on board in the factory, second free on board in the port. But we don't call this as a free on board. Let's rename it as. Okay na? To this plus or minus is done as per rule 10.1. We have a list. Chubistani pada left. We have a list where plus or minus will be done. What should be added? What should not be added? Example, packing, add. Durable and returnable packing, don't add. Okay, commission, add. Buying commission, don't add. Incidental expenses, add. Like that we have a list. Okay, after you do that plus or minus, whatever you get, the answer is called free on board. For us, what it is? Cost. Then from that port area to our port area to transport, we incur transportation, which we call it as freight, and we incur insurance. Once it is landed in our port area, this price in the port area is called cost, insurance, freight. It's called CIF value. Cost, insurance, freight. It is called CIF value. Okay, E CIF value manak T or this is the story of customs. From the exporting country, first time price. So this price we have adjustments plus or minus. Then the goods will reach port area. Port area of which port area? Port area of exporting country. From there you have got freight, you have got, so cost, insurance, freight will give you in India what? CIF value. Okay, so once the goods are landed in India, the value is called CIF value. A CIF value mana your. Okay, deeniki as per 10.2 we have some rules. Ivi chala important than 10.1. Okay, first one freight, second one insurance. First one is freight, second one is insurance. Okay, freight. Freight lo two types malli. Air freight, sea freight. Air freight, sea freight. Okay, air freight em cheyalante you have to take actual air freight or 20% of FOB, whichever is lower. Ante air freight cannot exceed 20% of FOB. What is FOB? Idi ante aa exporting country lo port area. Water aithe port, air aithe airport. Akkada వచ్చే value ante after doing adjustments of rule 10.1. Okay na? Then if it is sea, if it is a sea freight, you take actuals. There is no limit in it. Sir, I incurred a sea freight, but how much is sea freight? I don't know, sir. Then you take 20% of FOB if actuals are not known. దీనికి లిమిట్ ఏం లేదు. You can see the actuals. Okay. So two types of freight రా, air freight, sea freight. Air freight అయితే actual air freight or 20% of FOB, whichever is. Sea freight అయితే actuals. If actuals are not available, గుర్తుపెట్టుకోండి, for sea 20% of FOB is not limit. Clear? Insurance. Insurance కి what do you do? If insurance charges are known, insurance charges are unknown. If insurance charges are known, you take actual insurance charges. If insurance charges are unknown, you take 1.125% of FOB value. 1.125% of 1.125% of FOB value. Okay na? So if it is known, you take actuals. If it is not known, you take 1.125% of FOB value. Okay na? So this is not maximum. 1.125 is not maximum. If you don't know, that you have to take. This is rule 10(2). Okay. Let's see what is there in 1. Here. Valuation rules. Section 14 subsection 1 talks about transaction value of imported goods, transaction value of exported goods. Look at this. Price actually paid or when sold for export to, delivery at the time of place of importation. Buyer and seller are not related to each other. Price is the sole consideration for. Okay na? Export goods kuda ante. Fixed date for relevant for determination of rate of exchange. What date we should take? I told you, exchange rate. The value rule 3. Okay, this is all which I will discussed. Rule 3 should be adjusted for rule transaction value. The following value being not included in the price shall be any price. Buying commission you should, brokerage commission you can take. The reason being, I don't know the seller in US, I don't know the processor in US. Cost of containers and packing, cost of packing, whether labor or materials. Then appropriate value of the following goods free, supplied by buyer free of cost at a charge shall be added. Materials, components, tools, dies, molds, consumable stores. Sometimes the buyer from India will send the materials to seller from USA. It's చాలా important. Engineering, development, artwork, design, plan, sketch undertaken elsewhere than. So design work, artwork, plan, sketch should not be undertaken in India. Anywhere in the world you do it, you add. Royalties and license fees you should add. Value of any part proceeds of a subsequent resale given to the seller you add. All other payments actually paid or payable by the buyer to seller engineering, artwork, design work, royalties and license, or any other subsequent resales. Okay na? These are 10(1). 10(2) cost of transportation, loading, unloading, handling charges associated with the delivery of imported goods to the place of importation, and cost of insurance. Ante first one is freight, second one is insurance. In case of cost of transport, 20% of board value of the goods. Insurance aithe 1.125% of FOB. Now this will give you a complete picture. Value of imported materials, carriage of freight and insurance, and loading in their country. Cheppa kada, from factory to their port area, whatever you incur, akkada kuda transport, insurance, loading, unloading, commissions, all will be there. Once you do that, if you will get what? FOB. ఓకే, ఈ ఎఫ్ఓబి మన ఎఫ్ఓబి కాదు, దీన్ని కూడా మనం ఎఫ్ఓబి అనొద్దు. ఏం చెప్పాను మీకు? కాస్టే అనేది. యూ విల్ గెట్ కన్ఫ్యూజ్ అన్నెసర్లీ. మీకు మెటీరియల్ కూడా ఎఫ్ఓబి అనే ఉంటుంది. దిస్ ఈజ్ నాట్ ఎఫ్ఓబి బికాస్ యువర్ సమ్ పర్సంటేజెస్ ఆర్ ఎఫ్ఓబి పర్సంటేజెస్. ఇది ఎఫ్ఓబి కాదు. ఓకే, తర్వాత యాడ్, కమిషన్, ప్యాకింగ్, ఇంజనీరింగ్, రాయల్టీ, సబ్సిక్వెంట్ రీసేల్, మన ఇది మన ఎఫ్ఓబి. చూడండి, ఎఫ్ఓబి వాల్యూ ఫర్, ఇక్కడ ఏమన్నాడు వాడు? ఎఫ్ఓబి. అనవసరంగా దీన్ని ఎఫ్ఓబి అనకండి, ఇది కూడా ఎఫ్ఓబియే, బికాస్ ఇన్ దట్ ఎక్స్పోర్టర్ కంట్రీ ఇట్ ఈస్ పుట్టింగ్ ఆన్ బోర్డ్. ఓకే, బట్ వీ డోంట్ కాల్ ఇట్ యాజ్ ఎఫ్ఓబి, వీ కాల్ ఇట్ యాజ్ EFOB. To this FOB you have to add freight, insurance. Okay, if any ship demurrage charges are there, that also you have to. ఏది నాన్న? ఇదా? ఎస్. ఇదేమో ఫ్యాక్టరీ ప్రైస్, ఇదేమో మన ఒరిజినల్ కాస్ట్. ఫ్యాక్టరీ నుంచి బయలుదేరాలి కదా, వేరియస్ ఎక్స్పెన్సెస్ యూ ఇంకర్. దట్స్ ద రీజన్ యూ ఫర్గెట్ అబౌట్ దిస్ ఫ్రీ ఆన్ బోర్డ్. దీన్ని ప్రైస్ అను, దీనికి ఆల్ అడ్జస్ట్మెంట్స్ యాడ్ చేసేసుకో. ఇఫ్ యూ డూ ఆల్ దీస్ అడ్జస్ట్మెంట్స్, ఆన్సర్ విల్ బి ఎఫ్ఓబి. దీనికి ఫ్రైట్, ఇన్సూరెన్స్ రెండు యాడ్ చేసేయి, సిఐఎఫ్ వాల్యూ. అర్థమైందా? సో దిస్ ఈజ్ వాట్ ఈజ్ యువర్ వాల్యుయేషన్ విచ్ యూ షుడ్ నో. ఓకేనా? ఆన్ దిస్ ఐ విల్ గివ్ నోట్స్ టుమారో అండ్ విల్ సాల్వ్ ప్రాబ్లమ్స్ ఆన్ దిస్ టుమారో. మనకు దీని మీదే ప్రాబ్లమ్స్ ఉంటాయి. ఓకే, తర్వాత టైప్స్ ఆఫ్ డ్యూటీస్ ఒకటి ఉంటుంది, అది చెప్తాను. చూడండి సింపుల్గా, ప్రైస్ ఆఫ్ గూడ్స్ ప్లస్ ఆర్ వాట్ ఎవర్ యూ plus freight plus insurance, then you will get CIF value. This is given as per rule 10. ఈ CIF value ne manaki E or A as per section 14 subsection. Clear? ఈ final conclusion, మన goods ప్లస్ ఆర్ మైనస్ అడ్జస్ట్మెంట్స్, FOB ప్రైజ్, ఫ్రైట్, ఇన్సూరెన్స్, కాస్ట్, ఇన్సూరెన్స్, ఫ్రైట్, CIF వాల్యూ, అదే టీవీ ఆర్ ఏ. దీని మీద విల్ డూ ప్రాబ్లమ్స్ టుమారో. క్లియర్?